Good morning. Welcome to Business 360, where business, markets, and the economy come into full view. I'm Margaux Salcedo, and this is the Bilyonaryo News Channel. Exclusive, the government's probe into substandard steel is widening. More than 40 Chinese-run plants are now under investigation, with authorities finding the same material in buildings that collapsed in Mindanao. Slow growth and elevated inflation are clouding the road ahead for the economy. We get the outlook of Manny Ocampo, President and COO of the Investment and Capital Corporation of the Philippines. And sales of electric vehicles accelerate by more than 130% during the first 7 months of the year. Exclusive on Bilyonaryo News Channel. The crackdown on substandard steel has widened, with more than 40 plants now under investigation. The Anti-Organized Crime Commission says the same steel turned up in buildings that collapsed in Mindanao. PAOCC Chief Benjamin Acorda Jr. says every plant they've identified using the induction furnace method is allegedly Chinese-owned. Investigators are now looking into whether Filipinos are backing them.
Have you apprehended or raided steel manufacturing companies using the IF method with not owned by Chinese? Or are they all owned by Chinese?
Unfortunately, based on our intelligence report po,
Karamihan sila may-ari.
Parang ganun po ang lumalabas.
So, may mga Pilipino ba nakapartner itong mga to?
If ever there are Filipinos, that's one subject for further investigation if they are indeed Filipinos.
Acorda tells Bilyonaryo News Channel that the use of substandard steel in construction may be far more widespread than authorities first thought. The NBI raided Chuangxing Steel Incorporated in Magalang, Pampanga last month, Davao Mighty Steel Corporation in August, and Philippine Sanjia Steel Corporation in Misamis Oriental. The National Bureau of Investigation is signaling a broader crackdown on illegal steel plants and products. The NBI emphasized that their operations are not limited to one region following a raid on Davao Mighty Steel Corporation.
Kahit daw Davao, pinuntahan ng NBI, pakiusap namin for people to understand that this is about political preference. This is not about kung saang region. This is not about negosyo. But this is about NBI and PAOK doing their job as a law enforcement agency.
The NBI is also investigating possible radioactive contamination of steel products after it rescued nearly 200 workers from the steel plant, 2 of whom have tested positive for elevated levels of radioactivity.
Preliminary technical evaluation na ginawa ng laboratories ng isang pribadong laboratory at ng Philippine Nuclear Research Institute, ang level po ng radioactivity sa Davao Mighty Steel Corporation ay mas mataas kumpara doon sa Pampanga po. Mataas ang level ng kontaminasyon ng uranium, thorium, and for the first time, radium-226.
Philippine Airlines could reportedly move all of its international flights to Terminal 3 of the Ninoy Aquino International Airport. That's according to PAL's Vice President for Revenue Management and Alliances, Christoph Gertner, in an interview with the publication Executive Traveler. Gertner says the airport operator wants all international full-service carriers under one roof to make operations more efficient. The move would also mean new PAL lounges at Terminal 3. He says the airline is already studying what that concept could look like, but would not say how many lounges it would build. The plans for new lounges come as PAL prepares to join the One World Airline Alliance. For now, PAL flies international out of Terminal 1 and domestic out of Terminal 2. Philippine Airlines and the San Miguel-led New NAIA Infrastructure Corporation have signed the first standardized operating agreement between the airport operator and a commercial airline. The agreement sets performance standards for PAL operations at Ninoy Aquino International Airport, including aircraft turnaround, check-in, boarding, and baggage handling. It also provides a clearer framework for NNIC and PAL to set expectations, measure performance, and address operational issues. NNIC President and CEO Ramon Ang says the agreement is designed to make expectations clearer and help maintain more consistent service standards at NAIA. Sales of hybrids and electric vehicles more than doubled in the first 7 months of the year, up 136%, while the rest of the car market went the other way. G. Baroga brings us on board.
Electrified vehicles continue to gain ground in the Philippine auto market, even as the overall car sales remain under pressure. Latest data from the Chamber of Automotive Manufacturers of the Philippines and Truck Manufacturers Association show total auto sales reached 241,725 units in the first 7 months of the year, down 10% from more than 269,000 units sold in the same period last year. Commercial vehicles continue to account for the bulk of sales, with nearly 194,000 units sold so far this year. That's 10% lower year-on-year from more than 215,000 units in 2025. Passenger car sales also fell, with 47,856 units sold versus 53,767 units a year earlier. But a bright spot for the industry remains electrified vehicles. Sales reached 38,286 units in the first 7 months, up 136% from just over 16,000 units in the same period last year. Hybrids have the largest share, with more than 20,700 units sold. Battery electric vehicles followed with nearly 10,500 units, while plug-in hybrids posted the fastest growth, selling 7,094 units, up from just 288 last year. Campi President Jing Atienza says electrified vehicles accounted for about 30% of the market in July, up 18 percentage points year-on-year. He remains optimistic that the industry can pick up the pace in the remainder of the year. And despite an 8% drop in sales, Toyota of the Bilyonaryo T family continues to hold on to the top spot in the local market. For BNC Mobility, G. Baroga.
The Philippine government reportedly plans to abolish at least 5 government-owned or controlled corporations this year. Governance Commission for GOCC's chairperson Marius Corpus told Philippine Star that the agency hopes to complete the liquidation process of at least 5 GOCCs. But he could not yet identify these GOCCs, with the matter still under discussion. The Marcos administration is looking to abolish GOCCs that no longer serve their mandate. We're taking a quick break. Up ahead, we get the economic outlook of Manny Ocampo, President and CEO of the Investment and Capital Corporation of the Philippines. You're watching Business 360. Welcome back to Business 360. I'm Margaux Salcedo. Inflation remains elevated while growth is slowing, with Moody's seeing GDP growth at just 3.6% this year. How are investors reading this difficult mix, especially as the Bangko Sentral ng Pilipinas decides on rates tomorrow? We get the economic outlook of Manny Ocampo, President and CEO of the Investment and Capital Corporation of the Philippines. Good morning, Mr. Manny Ocampo.
Hi, good morning, Margaux. How are you?
We're good this sunny morning, thankfully. But let's talk about the cloudy forecasts that have been before us recently. Moody's recently affirmed the Philippines' Baa2 rating with a stable outlook. From an investor's perspective, what does that affirmation tell you about the country's economic fundamentals?
Well, okay. Moody's came out with 2 pronouncements. The good news, obviously, is the stable sovereign outlook, which indicates the country remaining to be credible for, something that is, the rating gives us a better runway for maybe future approaches to the international debt market. So that's the good news with the stable rating that they maintain. The not so good news is really the lower GDP growth forecast. And, I guess that's something we already see considering where second quarter GDP growth really dropped down to. And, I guess their outlook for the remainder of the year, Margaux.
Yes, actually, even the Development Budget Coordination Committee had adjusted its forecast, its targets to 3.5 to 4.5%. So I guess on the part of the government, they had also been expecting this. But on the other hand, others, such as Fitch, although it reassessed us from stable to negative, they had projected our GDP to 4.6%. What does that tell you about these variations?
Right. Well, it seems people have different assumptions on where the GDP growth numbers. I think Fitch was looking at government reactivating infrastructure spending. We hope that the government does do that. For example, real flood control projects could really help. Not only drumming up activity and growth, but really addressing a key problem that we all have in the metropolis and also in pretty much the rest of the country. With and again, the emphasis on real flood control projects. Margaux.
Yes, on the other hand, it seems that Moody's was also looking at debts, interest payments eating up more than 14% of government revenue against 9% median. What is your take on this?
Well, our debt levels are at record high levels, so there's an interest to pay, and on that one, and unfortunately, rates have moved up. So debt service with that, it's up really both in the local markets. Government is still the biggest domestic borrower in the domestic credit market, as well as the international markets where rates have started to pick up as well. So that's there. So, unfortunately, we are borrowing maybe to service old loans or repay old loans or refinance old loans. So that's there also, Margaux.
Yes, aside from this, Moody's also mentioned political risk heading into 2028 and the fallout from the flood control probe. How much of the current slowdown is policy-driven, do you think, versus external?
Well, there's still a lot of questions on, but maybe the shall we say, the issue on the transition, if you'd like, to a new administration would probably become more felt in 2027. And, by that time, we probably will have a better picture of the candidates coming out and who the new administration will look. So that's there. But that remains a risk factor that is a overhang for the Philippines. Your other question, sorry, was?
I would like to, on that note, I would like to move to inflation. Okay. That's another item that everybody's looking at right now. Of course, we are looking at the Iran war. It's very uncertain. Although, in fact, Moody's had said that it's cyclical. What is your take on this? I would think that it's hopefully temporary, but it seems that even they have accepted that this might be prolonged. How will this affect the Philippines and our own growth targets?
Well, okay, inflation is there. So, trend-wise, the last couple of months, we've seen it sliding down, maybe is the right term. Not a big drop. But, directionally, maybe it's encouraging that it's starting to come down rather than pick up. Our concern really is, this past month or so where we had weather disturbances, the monsoon rains. What the impact of that, Margaux, will be on food prices, especially the monsoons that have maybe destroyed or taken a toll on some of our crops. So again, rice being one of those big factors in the inflation basket, we'll have to take a closer look at that. And we anticipate that, well, I'll put it this way. Don't be surprised if you see inflation, start to pick up because of the weather disturbances. But it should be a slight pickup. Now, having said that, maybe the next phase would be if inflation will remain high for a while, what do we expect BSP to do? Everybody's talking about a 25 basis point move up already. So that's pretty much a foregone conclusion. We'd be surprised if the governor maintains rates where they are rather than hiking it up, Margaux.
Of course, the Bangko Sentral ng Pilipinas, BSP Governor Eli Remolona, says that they will do everything that they can to bring inflation rates back to target. As a matter of fact, the BSP's Monetary Board meets tomorrow. Do you see a hike, a cut, or a hold?
Pretty much a hike. I guess this is really picking up from the mandate of the BSP is really to control prices. And as you mentioned, they will do whatever they need to do to keep a lid on prices running away from us.
Okay, and the PSEI has been stuck in the low 6,000s with foreign funds still net sellers. What do you think breaks the market out of this range?
Well, I guess the uncertainty, removing the uncertainty on the rates. BSP says rates go up, then that's it already, which I think is pretty much being factored into by the movements of the market over the last few days. Even today, it's starting to go down again. So I think market is already factoring in a rate hike. So that's there. What will pick up the market? The inflation print for next month. That's something we continue to take a look at. Hopefully, a more encouraging third quarter corporate earnings report, because the second quarter, while generally was okay, wasn't exciting. We'll put it that way. Margaux.
And for investors watching this, with rates possibly at 5%, does fixed income now beat equities on a risk-adjusted basis?
We'll go with the fixed. I think the bias will still be to take a look at fixed income after tomorrow. If you're holding cash, wait it out until the BSP decides tomorrow where they will go with the interest rates. If it goes up, then you take a look at positioning after that time. I think we will be very choosy also. The other asset class that we'd like to take a look at after the Monetary Board decision tomorrow will be on REITs. Take a look at adjustments on REIT prices. If rates go up, we expect REIT prices to come down. But it may be an opportunity for investors to get in and take a longer view with select REITs, Margaux.
And for foreign investors looking at the Philippines today, what do you think is the biggest reason to come in, and what is the biggest reason to stay on the sidelines?
Okay, the foreign investors will take a look at our exchange rates. The hope is that if rates go up tomorrow, maybe you'll see a little bit more stability than instability in the FX rate, because that's another thing that foreign investors have to contend with if they come in. Are they coming in and then you see a depreciation again of the peso, so they get a double whammy, if you'd like, on making an investment here in the country. Margaux.
And finally, just going back to Moody's, the good news is that we are still stable. And also, we have also had other good news these past few days, which is that we achieved upper middle income status and single-digit poverty levels, which were really big goals and targets of this administration. But the other one that seems to have lagged behind is the dream of achieving A rating, the road to A, which we have been targeting since maybe 10 years ago already. Do you think it is still possible to achieve this under this administration?
might be a bit tricky considering where we are, Margaux. And the reason for that is really, I think we need to have a pickup in growth. We have to manage our debt position a lot better. And unfortunately, current circumstances may limit government action on that one. The administration may probably start something with Pax Silica, but the impact of that may already be for the next administration.
We had Secretary Arsenio Balisacan here yesterday. Just as a follow-up to that, we are very hopeful for the second half of the year, hitting 4.4% to meet our targets. So do you feel confident that we can achieve this and get back on track?
Yeah, I think that's entirely possible. And right now, the key, Margaux, would really be government action because government will be the one that will have the purse, if you'd like, and the wherewithal to stimulate or jumpstart growth. And, infrastructure projects would be the easiest one. They already have a budget. They already have target programs. So it's really implementing the infra projects that they've approved, they've set aside funding for, Margaux.
So the ball is now with the implementing agencies to lift our economy.
Right.
So thank you very much for that, Mr. Manny Ocampo, President and COO of the Investment and Capital Corporation of the Philippines. It's been a pleasure speaking with you this morning, sir.
Thank you, Margaux. Pleasure is mine.
China is warning the United States that its new sanctions campaign against Iran will only fuel the conflict. It's Beijing's first response to what Washington is calling an economic D-Day, a sweeping package that targets Iran's aviation, shipping, gold, technology, and digital asset sectors.
中方已多次表明
They will only further fuel conflicts, trigger risk spillovers, disrupt global economic and financial order, and impair the rights and interests of other countries. The top priority is to de-escalate the situation and return to the track of dialogue and negotiation at an early date. China will take all necessary measures to resolutely safeguard its own legitimate rights and interests.
China adds that the new U.S. sanctions have no basis in international law and are not authorized by the UN Security Council. On our stock market action, the Philippine Stock Exchange Index opened sideways this morning as investors stay on the sidelines ahead of the BSP policy meeting. As of early trading, ICTSI stocks are down, while other heavyweights are up. On Wall Street, stocks closed higher as technology shares rebound. All eyes are now on Nvidia, which will report its Q2 earnings Wednesday, New York time. Manila Water is buying back its own shares, with the company spending more than 39 million pesos so far this August. The Razon-led Water Utilities Board approved a program to buy back up to 3 million common shares at a maximum of 35 pesos each. That puts the program's potential value at 105 million pesos. Manila Water says it may use the repurchased shares for its stock incentive program or buy them when management sees the stock as undervalued. The Philippine Competition Commission has cleared the Gokongwei's sale of control over their instant noodle venture to longtime Japanese partner Nissin Foods. Universal Robina Corporation is selling a 21% stake in Nissin Universal Robina Corporation to Nissin Foods USA. That cuts URC's share from 51% down to 30% and lifts Nissin's from 49% to 70%, handing the Japanese company majority control of a partnership that goes back more than 3 decades. The sale of nearly 40 million shares is set for January 7 next year. The price has yet to be disclosed, with URC saying it will be finalized by December. And that's Business 360. I'm Margaux Salcedo. Thank you for joining us. Keep it here on BNC, the Bilyonaryo News Channel.